What happens when the vault that holds the world's financial trust starts to crack? What if two of America's closest European allies quietly arrange to pull 1,930 tons of gold, worth over $209 billion, from the heart of Manhattan back to their own soil? This isn't just about bullion. It's about trust, sovereignty, and the beginning of what could be a historic unraveling of the US dollar's global dominance. Why are Germany and Italy preparing NATO cargo planes for a secretive midnight operation? What pressure is building behind the scenes in Berlin and Rome, and what happens if other nations follow their lead? And could the mere act of moving gold physically out of the New York Federal Reserve ignite a chain reaction that reshapes the future of US debt, mortgages, and even your next car loan? Stay with us, because this might just be the biggest story you haven't heard about yet. By the summer of 2025, the gold standard may be long gone, but gold's power as a symbol of trust is very much alive. A leaked memo from the Bundesbank and Bank of Italy revealed plans for an unprecedented withdrawal, 1,930 metric tons of gold stored at the New York Fed to be returned to Europe in under 10 weeks. That's over $200 billion in pure gold. But why now? Why this urgency? The answer lies in a perfect storm of political mistrust, trade war tension, and rising populist pressure on both sides of the Atlantic. In Germany, opposition party AfD is fueling a national movement to bring back our gold. In Italy, Prime Minister Giorgia Meloni faces a dilemma: stick to her promise to repatriate Italy's reserves or risk losing her leverage in ongoing trade negotiations with Washington. Meanwhile, Friedrich Merz, the CDU leader in Germany, is caught between appeasing US policymakers and keeping the rising AfD at bay. So let's break this down. Germany currently holds 3,352 tons of gold, with about 1,236 tons still stored abroad, including 236 tons in New York, valued at over $134 billion. Italy has 2,451 tons, with approximately 700 tons in US vaults, worth roughly $75 billion. That means nearly 1,000 tons of gold in US custody could be subject to a sudden repatriation request. To execute the plan, NATO-grade aircraft, specifically Illinois 76 and C-17 cargo planes, would fly nighttime missions, moving 50 to 60 tons per week under heavy security. The infrastructure is in place. The only missing ingredient is political will. But this is about more than just gold. It's about the very faith in America's role as the world's banker. Since World War II, the United States has acted as the de facto vault of last resort. Gold stored at the New York Fed has been seen as immovable, untouchable, a permanent fixture in the international system. But if that trust is broken, what happens next? AfD politicians like Alice Weidel are pushing the narrative hard: Germany's wealth is being held hostage by Wall Street. She calls the current arrangement economic captivity, and warns that the US could use Germany's gold as leverage in future negotiations, especially as Trump's administration prepares more aggressive tariffs on German autos and steel. Her message is simple: gold equals sovereignty. And this message is gaining ground. Recent polls show that over 50% of Germans now favor repatriating the country's gold, compared to less than 30% just 2 years ago. Even center-right figures like Markus Ferber of the CDU have begun echoing the concern, citing Trump's offhand remarks about tapping into foreign reserves as a national security issue. What's behind the sudden panic? One factor is the fear that Trump could use US-based reserves as bargaining chips. Another is the growing concern that US Treasury debt is no longer risk-free. When Merz hints at using gold repatriation as leverage in trade talks, it's not just a negotiation tactic, it's a reflection of a deeper, systemic distrust. And then there's Italy. Meloni's government is trying to strike a delicate balance. In 2019, as an opposition leader, she promised to bring Italy's gold home. Now, as Prime Minister in the middle of a diplomatic chess game with the White House, she's keeping that promise close to her chest, but not too close to the table. If the US fails to offer significant trade concessions, her next move may be to launch the Villa Borghese Vault project, a state-of-the-art gold reserve under Rome. So why is this gold so important now? Beyond the symbolic value, there's a very real economic trigger at play. Pulling nearly $210 billion in bullion from the Fed's balance sheet, especially if done rapidly, could trigger short-term liquidity stress in US markets. Gold reserves appear on the Fed's books as foreign deposits. A sudden outflow could tighten overnight repo markets and push Treasury yields up by 10 to 15 basis points. And that's just the beginning. According to analysts, the secondary effect could be even worse. Germany and Italy also hold approximately $18 billion in short-term US Treasury bills as parallel insurance. If they sell off even part of that in response to the gold pullout, yields could spike further. A 10 basis point move in 10-year bonds could raise borrowing costs across the board: mortgages, corporate debt, car loans, you name it. Let's put that in perspective. A 15-point hike in long-term rates could increase the monthly payment on an average US mortgage by $30, or over $350 annually. That might not sound dramatic, but it could reduce housing starts by over 5% in 2026, slashing demand for construction steel, cement, and labor. In the automotive sector, where loans are already expensive and wage costs are surging, sales could drop by 500,000 units per year, putting more than 10,000 manufacturing jobs at risk in key swing states like Michigan and Ohio. Meanwhile, rising municipal bond yields will force cities to retender infrastructure projects, delaying critical investments in roads, bridges, and water systems. In Washington, policy planners are scrambling. One idea reportedly floated at the Fed is to accept gold as collateral for emergency liquidity, effectively turning bullion into a bridge asset for the first time in decades. But this covered bond window would undermine the dollar's image as the lone global safe haven. Another idea: expand swap lines with the ECB and other central banks to cushion market shocks. But swap lines only work as long as confidence in the dollar holds. If the psychological spell breaks, if gold really does move out of the vault and doesn't come back, the era of the unchallenged petrodollar could be over. Internationally, smaller gold holders like the Netherlands, Austria, and Belgium are already watching closely. If Germany and Italy go ahead with their withdrawal, these countries could follow. A domino effect could raise gold's share in global reserves to 25% by 2028, cutting the dollar's share in the basket by 4 to 5 percentage points. That would mean $800 billion less demand for US Treasuries, pushing interest rates up long term. The Congressional Budget Office already projects interest payments to hit $770 billion by 2026. A restructured global reserve composition would push that even higher, potentially overtaking defense spending by the end of the decade. So what began as a technical bullion transfer is quickly becoming a test of US economic credibility. The Fed, the Treasury, and the White House are all watching closely. Because if these gold shipments begin, they won't just be moving metal, they'll be moving perception. The idea that paper money is only as good as the trust behind it will be proven, one cargo plane at a time. Will Merz play the gold card in the next round of trade talks with Trump? Will Meloni fulfill her campaign promise and start pulling gold out of Manhattan? Or will the fear of triggering a global financial crisis force both countries to blink? And more importantly, what happens when other countries realize the vault isn't sacred anymore? Let us know what you think in the comments. Should countries bring their gold home? Does storing reserves in the US still make sense in 2025? And is the dollar's dominance finally beginning to erode? If this video opened your eyes to the deeper game being played behind closed doors, hit that like button. Subscribe to our channel and turn on notifications so you never miss a breakdown on global finance, gold, and geopolitical power shifts. Because in this new era of economic uncertainty, trust is currency. And gold is speaking louder than ever. Let us know in the comments below. Your opinion matters, and we'd love to hear it. Thanks for watching. We'll see you next time.